prepare to delve into Tesla's financial universe. And this research, prepare yourself to learn all the important behind-the-scenes information about how Tesla will perform in the upcoming weeks and months. For starters, the company generated over $4 billion in net income and nearly $25 billion in revenue. But the net margin on automobiles decreased as a result of a sharp decline in prices. What's next for the company's stock price? In a bull market, it might rise to a high P ratio of 60 with a share price between $240 and $250. In a bear market, however, the price might drop to $163. Our analyst projects a P ratio between 50 and 60 going forward, and he thinks Q4 revenue will nearly reach $30 billion. Prepare to learn about Tesla's financial performance, growth prospects, and this insightful video analysis. However, before we go any further, make sure you're a Wall Street Game subscriber and remember to hit the like and notification bell buttons. Tesla announced first quarter revenue about $25 billion and net income of over $4 billion, primarily from vehicle earnings. However, the net margin for automobiles fell to 14.5% as a result of a notable decline in prices from 20 to 10%. The EPS was $1.30, but considering the record-breaking quarter in Shanghai, this number is probably going to be impacted by FX currency charges. It's anticipated that Tesla would suffer about $350 in currency expenses, which could lower the EPS to $1.19. The number of outstanding Tesla shares will be reduced by one each quarter, and there won't be any buybacks in 2023. As for the stock, it is now trading at over $180 per share, with a market value of nearly $700 billion, a P ratio of 55. The stock price would be $204 per share, with a market capitalization of more than $650 billion if the prospective P ratio was 50. In the short term, looking ahead to Q2, a more realistic scenario would be a P of 45 to 50. If the market turns bullish between April 21 and July 20, the stock could potentially reach a high P ratio of 60, with a price per share in the range of $240 and $250. If it goes even higher to a P of 65 or 70, the price per share could reach $300. However, if things turn bad with a higher interest rate and negative sentiment, the P ratio could drop to 40, with the stock price falling as low as $163 per share. It is anticipated that Tesla will deliver around 450 zero vehicles, potentially generating a total revenue of $25.5 billion and a net income above $4.3 billion, subject to fluctuations in foreign exchange charges. We have no doubt that Tesla's financial performance will continue to grow. According to their predictions, the company's net income will surpass $27 billion in the first quarter, with about $250 million coming from Tesla Energy alone. The bulls anticipate a large drop in costs, translating into a PS of 1.29 cents per share and an EPS of 4.80 overall. Bulls also think that Tesla's stock price will rise, possibly reaching a P of 70 in the future. However, for Q2, they recommend a safer P of 50 and a fair stock price of $228 per share. The bulls also think that Tesla will continue to grow significantly, delivering 475 zero vehicles in Q3. They that Tesla's earnings will justify a higher P, perhaps even up to 70, and that the stock price will reflect the company's strong financial performance. Finally, the bulls point out that interest rates are high and do not think the Fed will raise them much higher. As a result, they do not think the Tesla stock price will drop much. However, given the company's dismal record, I don't think it could move above 6 type in Q3. The highest it could go is 65p or $312, but I doubt it will go much higher than that. This period runs from October 21 to January 20, which is 9 months from now. I think we should be out of the bear market by then, and once we are, a P of 50 to 70 would make sense, primarily because of the growth expected for Tesla in the production of Cybertrucks by January 2024. There should be a few thousand of these vehicles on the road, or at least produced to be delivered. This will be a significant indication of Tesla's progress. If you ask me, I suggest keeping the P around 55 or even 50 to avoid the bears. Bulls. But if something unfortunate happens, like a cyber strike that is postponed until next year, or the plants in Shanghai and Berlin close again, we might see a peak of 30, 35, or 40. As a result of Amazon's poor performance at 100p, the bulls expect the stock to be around 80, 90, or even 100p. This high expectation is due to Amazon's consistent missed earnings, which compresses the P when they beat earnings. However, since there is a lot of interest in Tesla, I think a constant P of 50 makes sense. Going into Q4, I predict that 500 Zero vehicles will be produced and delivered. This production would result in the revenue almost reaching $30 billion in total, which is insane. I will cut it to about $375 million for FX considerations, so we may still expect over $4.5 billion in net income. This quarter would be like watching a crazy quarter with a net income of about $5 billion. Estimates for Q4 suggest an EPS of 1.36, and the total EPS for 2023 is expected to be close to $5. Despite the fact that 2023 is a recession year, the total number of vehicles delivered in 2023 will surpass 1.8 million, with a growth of 40% year-over-year. The stock price is expected to be approximately $249 per share, but I predict a bull rally between January 21 and April 20, 2024, during which the stock price could reach a 6-type trading at approximately $300 per share. I also think that there will be a violent bull run by the end of 2023 or early 2024, driven by the Fed's pivot and a lot of good news. If Tesla's price per share reaches 61, the stock would reach a $1 trillion valuation at roughly $304 per share, but the stock price could rise much higher than that. A 61p would result in a market cap of $1 trillion by the end of 2023, or the beginning of 2024 if there is no dilution. At that point, in my opinion, there will be a huge bull run that might continue up to 65 or 70 years. Furthermore, I don't think it will reach that level, which would give the market a value of more than $1.1 trillion. For this reason, I think the greatest price it might reach in Q4 2023, when the profits are announced in 2024, is 60. But again, bear sentiment could push it to 40 or even 30. A 6-type would not make sense for Tesla. A reasonable stock price range for the end of this year in 2023 is between $249 and $299, or $300 per share. By the end of the year, I want the price to be at least $260, so it seems comparable. If it to 30, that's $150 per share, which is good news nonetheless. I'm certain that a bull market will have taken hold by then. Let's observe and see what transpires. Due diligence should be done and caution should be exercised, as this is merely a prediction. It is predicted that around 1.8 million deliveries of Tesla stock will occur each quarter in 2023. We'll update this in February and March to incorporate Shanghai's February sales data, at which point we'll have a much clearer picture of what's happening as discussed. 430 Zero vehicles were delivered in the first quarter with an EPS of 1.19, with a revenue of about $25 billion and a net income of more than $4 billion. Mostly from car sales, Tesla enjoyed a record-breaking first quarter. In the near future, our analysts predict a P ratio between 50 and 60. In the short term, the stock price could potentially reach a high P of 60 with a range of $240 to $250 per share in a bullish market. However, in a bearish market, the stock price could fall to $163 per share. We hope you found this video helpful and informative. Don't forget to subscribe to Wall Street Games and hit the like and notification bell to stay updated on our latest financial analysis. Looking ahead, it is anticipated that Tesla's net income will surpass $27 billion in Q1, thanks to a significant reduction in expenses and the delivery of Cybertrucks. Once again, we appreciate your time and we'll see you in the future video.